All right. Tap, tap, tap. What's that? I know, I know. And I wasn't even supposed to chair the previous one. That was Mal.
You only get half the pay now.
Yeah, that's right. I'm only getting 20 cents an hour instead of 40. All right, it's now 3 o'clock. I'm going to call to order the Finance Committee of the Indian Wells Valley Water District at 3 p.m. So with that, I'll look for any comments from the public or from the committee. Hearing nuns, hearing none, we'll go on to fraud risk discussion. Anything?
We had our interim audit last week and everything's good.
All right.
So no fraud risk detected.
We audited so well, they're going to give us a cut and rate break.
I doubt that.
Oh, well, you can always ask.
No.
Yeah.
We'll ask.
All right. Number 4, Groundwater Authority imported water costs. I don't know if there's much more to discuss on that.
The only thing I'll say is like, we believe that the GA is going to be coming out with either a 60 or a 90% design, and one would expect that in a rational world, you'd have updated cost numbers in that, but I guess we'll have to wait and see.
Yeah, be anxious to see that for sure. And we'll just sort of wait back and see what's going on. All I know is this, I'm not sure what their cost is today, but it's in the 17, $18 million range. I don't know.
Yeah.
It's huge. Okay. Nothing else on that? Any questions, any concerns? All right. 5, second quarter 2025 investment reports.
Okay, for the second quarter 2025 calendar year, we have unrestricted fund balance of 9.455 million and restricted fund balance of 4.49 million for a total of 13,946,000.
Okay.
And then you can see where all of those funds are housed.
Placement. Emergency water. Emergency reserves, 3.4. Alternate water supply is up to 2.2 roughly? Yeah. Okay.
What kind of interest do we get with Kern County Treasurer?
So
The capital improvement one is the one that we're hoping to get back up in about 3 or 4 years. Is that the one we're going to work
Yes,
on?
That's when we have a goal of, I think it's 10+ million.
Yeah, 10 plus million, but I think we're
Tank, a
three,
reservoir. Yeah, tank.
in our last rate study, I think we had over 5 years before we would get there, something like that, yeah.
Yeah, I-
By then, the cost will double.
And if you quit spending it all.
I was going to mention an interesting conversation I had with Ty from the conference in Monterey. So there was a organization, California class, and they're associated with CSDA. It was interesting. So they were one of the big sponsors, and they got up there and said, we went from having $0 to $2 billion in 2 years. And I was like, I was talking to Ty, and I was like, these guys are like investment managers, I take it.
Right.
So, and I was like, that just sounds so
Unbelievable.
so, well, it sounds not
Investment.
only unbelievable, but almost like one of these, like these Bitcoin places where suddenly Max Friedman is worth, $100 billion. And you're just like, it was an interesting conversation because I don't want to say anything bad about them. They put on they hired Joe Theismann to do a speaker, and they got up there and told how great they were. But yeah, Ty and I were both sort of on the same page when I went like 0 to $2 billion in 2 years. There's something going on there.
Yeah, I've talked to other finance directors. I've got a couple contacts out there, and they're all kind of leery of it too. Like, well, let's give it a few more years because, yeah.
Yeah, so, and of course, that was being pushed pretty hard at the conference. I immediately went to Ty, and Ty goes, yeah, let's kind of look at that with a little bit of a skeptical eye, and I have to agree with
They were at the last conference I was at
They had
too.
an
so-
audit yet?
I do not know. I was just kind of like, kind of blown away by the 0 to 2 billion in 2 years. It was,
Yeah, okay.
yeah.
So a question I have is the restricted from funds that we have, where are those earmarked for right now?
So the 87-1,
The 4344 restricted.
so those are, so the Brady project, I know there's some equipment purchases like the Skid steer we talked
Okay,
about.
that's gonna come on.
There's several different
Okay.
items we have.
All right. But most of that's allocated toward pipeline replacement am I
Yeah,
correct?
not most of it. I think pipeline is like 1.2 million.
Okay, all right.
I'm sorry, are you talking about the 2024 bond?
I'm talking, well, yeah, the bond. I was asking where that's earmarked.
We
Yeah,
also
I
have,
thought we had spent all of our,
No.
we've got it all obligated for spending this year, the balance.
Yeah.
There's still the final payment for the Northwest Transmission Line has to come out of here as well.
oh, okay, okay.
okay,
right.
okay, so we still, basically, we owe, it's already obligated.
But it's all,
Yeah,
yeah.
it's all obligated, yeah.
For all practical purposes, because it's already been done.
Some of it has, the rest of it is scheduled for this year.
Okay.
So a lot of that'll be, Stan, some of that'll be to pay, I believe, for the CIP labor as we do like pipeline installation. So that's all gonna occur in the future.
So we withheld 5 or 10%, but there's still obviously some other monies that we had not finished paying for work completed.
Oh, not on the Indian pipeline, that,
Yeah, there's a few payments that would come
Okay.
out of this balance.
Okay,
We
so-
may,
okay.
For our purposes, it's not real money.
Yeah, it's obligated. I like that word, yeah. Okay. I don't have any questions on that. I'm glad to see our total water supplies up there. Emergency reserves have to be there, committed. It'd be nice to see that capital improvement one increase as the years go on to, I know we have a set of 10 million and I know why, but let's hopefully we can move it somewhere off, off that mark. All right, I got no more questions there. No one from the viewers, no one from here. Let's see, where am my financial statements? I think that we
I'm
should,
sorry,
we're on financial statements.
I'm sorry.
We're done with second quarter investments unless you have some
Oh,
questions.
Second quarter investment report.
Right.
Okay.
Okay, so we'll move on to financial statements.
so this is for last fiscal year, June 30th. We've done probably the lion's share of the journal entries that need to be done. There's still a few more outstanding, plus the auditors will have theirs for the deferred inflows and outflows. But here you see actuals net revenue of 2.556 million.
Right.
Remember, we received a grant of 3 million
Right.
for the Northwest Transmission Line, so that kind of skews that number a little bit. So we spent about 500,000 more in operations than we took in. But that's better than what we had budgeted, which would have been a negative 1.35 million.
But yeah, I noticed your capital contributions for actuals are 3.4 million. Is that the 3 million?
Yes, 3 million of that is the grant.
3 million, that is the grant.
The rest
Okay.
are, yeah.
All right.
Okay, the biggest change from last month, or the month before last, our original preliminary was the biggest one, the total water sales.
Total water sales, and then we had to add the July payment for June GSA fees. So on the expenditure side, the GSA fees went up as well.
Okay, so the GSA fees, which GSA fees, revenue or payment?
The payment, the expenditure.
Payment, okay. Okay, I noticed, one of the reasons why I asked this to be on here is because I realized that when we went through it the last time, the water sales actuals was at 12.8 million.
Mhm.
And we had used 3.3 million to generate our FY '26 budget. So in other words, we were $500,000 short from the estimate used to generate next year's budget. Well, now we got the opposite situation, is since we used $13.3 million to generate next year's budget, we actually underestimated our income by at least $700,000. So my feeling is that we need to revisit our FY '26 budget and see whether or not, I mean, $700,000 has got to make a difference in our budget. So I will bring that back up
Okay.
in our future.
Yes, a 6-month review typically. We look at all that, do we not, Ty? Okay.
I think that might be too late. If we're
Do-
off by $700,000 now, I think is the time to know that, because I see some other things coming up where we want to add tasking and expenses to the budget already. And I think $700,000 is a pretty large chunk of money.
So let me make sure, Stan, I got it correct. You believe that based on our initial estimate for 2026, that we will likely have $700,000 more than we initially estimated?
Well, actually, because there is a fee increase of 10% 6 months in,
Yeah.
it's probably more like 105% of that $700,000.
Ty, you concur with that?
No, just because I like to be conservative.
Yeah.
That's why we have the 6-month evaluation. If we see we're going to be bringing in way more money than we had anticipated, then yes, we can make those changes. But I think at this point, it's premature. As you'll see in the next report, when we go through the August numbers, we're coming in under budget on water revenue
Right.
at this point. So I think it's premature to make those decisions, but I'll defer to the board.
And your comment about that $3 million, I see you have it under capital contributions, but that $3 million doesn't show up under the expenses because it was a capital expenditure, right?
Correct.
So basically, the difference is the 2,556 to the 3 million is about negative 500,000 roughly, which is better than we anticipated.
Right.
Okay. That's odd. But I mean, you got to show that as revenues because it is.
Yeah.
But you don't show it as
You have to look under capital expenditures.
capital expenditures. And these capital expenditures of 8.2 million, 6.8 of it was everything except for the $3 million and the 500,000 AD bond balance. Yeah.
The 6.8 includes the 3 million.
Right. Yeah. Uh-huh.
So I'd also like to, seems like a good point to bring up just some trivia that came up in the, at the Monterey Convention. There's a lawsuit currently being reviewed up higher courts. San Diego County or City Water District had a tiered rate structure, and the courts determined that under California state law, you can't have tiered rates based solely on water usage. Like if you use more water, they fined that district $78-ish million that they're supposed to return to their customers. This lawsuit isn't final yet. I spent some time talking to lawyers who were talking about this at the conference. It's not a final determination by the courts, but it could lead us down the path where multiple rates based on water usage could be deemed illegal in California, which would not be good for us because that is our primary means of pushing for conservation. So it's a very odd position for the state to be going in, that, you know, because pretty much everybody has these tiered rates.
I think
The good news, I
Go
was
ahead.
gonna say, the good news with our tiered
Yeah.
system is because it's a different cost for the water, so that is.
Yeah, it's the GA
allowable-
fees. Yeah.
Yeah,
That is allowable under the state, so.
Right.
Ours are good, but that's why we went to that single tier, and the second
Right.
tier is just the GA fees.
in the past, we've also had tiers, but we've had analysis to support the need for those tiers. And I don't think we've ever done anything illegal where we have normal usage and then based upon, what's the term that Mark uses, the heap or the, you know, there's, if you look at the water distribution over the year, there's a peak
Oh, yeah, peaking.
Oh, that's right,
Peak
peak
daily,
peak day, yeah, I
Yeah.
remember that.
And I think we've been pretty honest there and been able to justify it in the back.
And
I would hate to have us say we're not going to use them in the future, because as soon as the one GSA fee goes away, we're going to need to have a tier to keep our environmental concerns, up there.
Yeah, and I
think that-
agree. I don't think I'm insinuating that we did anything wrong in the past. What we did was perfectly legal, and I don't think there's any question of that. But certainly at this point, the courts are weighing in, and it probably will go to the Supreme Court of the state of California. As the lawyer said, too early to determine, but certainly something worth,
No.
trivia worth knowing that is going on.
You can't-
We've known for a long time that a tiered system without justification is illegal.
Right.
You can't just set it wherever you want to. You have to justify it. And I think we always have.
Well,
I don't-
Mark did a
I
good
don't
job
think
of,
there's-
when we get into, if I remember correctly, the tiers where they increase with usage, it was based on the cost of conservation policies and environmental programs we had. So he would figure that cost and put that into a tier.
Right. But
Yeah.
remember, when we did this last rate study,
Right.
Mark said this is much more defensible in court.
Exactly, and
The courts are changing their opinion on, as
Yeah.
George said.
And
on those
and I would
tiers.
even agree that if we were to have more conservation programs and such like that, that would be divided to all the customers,
Yeah.
not just the higher usage.
I mean,
That way
you
it keeps
could
it
look,
fair.
because we already do like zones.
Right.
And whatnot. You could look, if we do recycled water, that would be.
That could be one, that recycled
'cause that's a
water.
different source of water, different
Right.
cost.
Those are more defensible.
Yeah, so
But,
just something to keep our eyes on. The lawyers were, I think what they said was San Diego is a huge water company with hundreds of millions of dollars a year in revenue, and they did their very best on a rate study and still got dinged for $70 million.
We've said for a lot of years, this board has, that you can't penalize people into conservation.
Yeah.
We've always said, we just don't want to charge you more because you're using more. And we can't do that. It just isn't right. So we always try to justify in certain ways. So I agree with that. And Stan may be right. We're looking to the future when the GA fees go away, or if they're less than whatever they are, that if there are programs we do for conservation and such, like Ty says, recycle water and such, then maybe that we have a way to put that in the rate study. But I think this looks pretty good for 2025 myself. I mean, it's better than we anticipated. And
And part of that's because we got that rate study in
right,
March.
that's right. Yeah, we did make an adjustment, exactly. Go ahead, Sam.
Could we go back to when we've discovered that I've got the budget here.
Yeah,
All right. The year-end estimate was 13,300,000. And then we extrapolated at 95% and a half a year at a 10% rate increase. Well, now we know the year-end estimate was wrong by 700,000. And I didn't catch all of the explanation that I got from Ty, why we shouldn't increase our our income based upon better information. If we had known 6 months ago or 4 months ago that we were going to bring in $14 million as a year end, we would have included that in the budget. Am I not correct?
Sure, but once again, a budget's a planning document. I just think it's premature in August, September, to be making changes to a budget based on usage that we don't know is going to occur. I mean, I think you still stay at 95% and of what it was. If we get to December, January, and we find we're still maintaining that same pace, then absolutely, we can make changes.
So Ty, let me ask this. So this surplus we're talking about, all it really did was reduce the amount of money that we dipped into our, essentially our savings. Is that correct?
That is
So it's not like this was, so the bonus that the water district received was that we didn't have to spend as much of our savings account,
Right.
so to speak.
Right.
So it's not like it was just extra money. It really just helped us out in the sense that we didn't have to, and this will help us recover faster to the levels of savings that we actually are projecting to need. Is that
Right,
correct?
right, absolutely. And yes, I did base this year's budget on estimates from last year, but as I said, I mean, we're already falling behind in this current year
Okay.
at this point, which may change. That
Well,
could-
yeah, I can see, we're behind already this current year, but not a lot, but
No,
that can creep up.
Okay, overall, how would you rate? I'm assuming these are not final, but they're very close to being final. How would you rate the overall health status of last year's budget results?
I would think overall, we're probably at a B. We're still, I mean, we're still at a deficit.
Right,
500,000 were taken out of reserves.
right.
I'm sorry, you said, I didn't catch that.
Yeah, we still ended with a deficit if you take out the $3 million grant out of the revenue. We're still on a negative 500,000. So we're better than we had anticipated when we put together this budget, but we're still not to where we need to be.
So,
We should be a net positive in putting money into build up those capital reserves that we've
Right.
been talking about.
well, yeah, and that is my concern is our reserves. I'm still trying to figure out, what $3 million,
Under capital contributions, you see for 2025, it says $3,431,000,000 under capital contributions, under actual. Yeah, 3 million of that was a grant from the state.
right?
But that 3 million is not accounted for in the expenses. It's just the way that this planning document sits. So you got to look at the expenses of $19 million. And if you want to add that 3 million into that, you can. So what we're saying is that the 3 million that's accounted for in revenues, which you have to do, does not show up on your expenses because it's a capital expense.
Yeah,
So you're positive 2.556 million, you need to subtract 3 million from that to get the actual negative for the non-capital funds.
so you think we are going to lose out of our reserves another 500,000?
We already have.
Well, yeah, from last year, you're
Yeah.
saying that we're
We're,
going
we're negative 556 or 5.
We did come in a little low on capital. I think we're gonna be pretty close, you know, there'll be a small deficit, yes.
well, I mean, I don't consider $556,000.
Right, that's why you'd have to look at the cash flow. I think when they come back and the auditors talk the net position, I think there'll be a small, maybe $100,000 deficit.
Oh, okay, not 500.
Right.
100.
No, because we didn't spend as much in capital as we had planned.
Okay,
So we'll.
Okay, yeah.
yeah. I
So
guess-
we're getting close to breaking even. We're planning to actually start putting money in the savings account in the future.
Exactly.
That was the plan when we did the
Rate study.
rate study.
Yeah.
Yeah, to get our rates back where they belong. I hate changing to the next page because it shows what we're paying to GSA and it always makes me sick. So.
Okay.
All right.
So
So,
are we on August now?
yeah, let's move into August of this year.
Okay, so for August revenues, we're at 2.8 million, which is above budget just from GA fees. We're a little low in the water sales. Expenses at 2.1 million, so everybody's been watching what they're spending, making sure, you know, we're not getting ahead of ourselves.
Right.
So we have a net revenue of 636,000, which is better than the budget anticipated for this time. Capital expenditures to date, 133,000. debt service principal, $187,000. And then total paid to the GA to date, $18,140,216. We broke the 18 million mark.
And
Ty, I think you said that actual water production and that we're selling is down, but revenues are up because I assume that would mean that there's some people who are using a lot more into the GA
Right.
category and other
Yeah.
people are lower. Okay. So,
Yeah, and
that's,
yeah.
that's typical summertime though. I've been looking at my bill.
Summertime.
I keep saying,
Okay.
when's it drop back down? I track it all the time.
Yeah.
I had a high bill here. I'll have one more next month and then it starts
okay.
to plummet.
So
Yeah.
that seems pretty typical for what we normally
Yeah.
see.
Most of the GA revenue we receive is from May to September.
Okay,
Yeah.
perfect. Thank you.
Yeah, I think it looks good. Again, keeping in mind, it's a planning document. I think it's always revisited. If it needs to be revisited earlier, you can let us know.
Yeah.
But I like to be able to look at it at least at 6 months.
Yeah, first
But-
of the year, I always like to be cautious because things change, water use may change. But
Yeah.
when we get to the winter time, that usually remains pretty consistent year to year to year. So we kind of know where we're gonna be.
Coming down to the GA fees, I'm asking this question. I get asked people by it all the time. Where's our replenishment money? And you've got the 2022 audit. They're claiming the 2023 isn't out because of us. And you told me you've talked to them, what, 4 times or so in the last year and a half? And I think it's something that David needs to push with him. What is it that you're not getting from us that you can't get this audit done? And because it seems to me you've given everything we need, because then you can get the 2023 audit in your hand. It'd be nice if we could get 2024, so you could give some determination to us where this money truly is in their accounts. You ought to be able to at least,
There was an obstacle with the GA understanding my spreadsheets, and maybe I get a little busy on my spreadsheets
Yeah.
when I was putting it together, so that could be, but I think they've understand it now, so I don't think there might be a holdup at all on our end
right.
for that 2024 audit.
I think David just needs to ask him every time he's there, where's the audit? Where's the audit? And if they've got the one finally figured out for 2023, there shouldn't be any holdup in 2024.
No.
Because boy, it'd be nice to have that audit in hand so you could definitively say to our customers that as of the end of 2024, we paid, I don't know, almost $14 million replenishment fee, and they presently have this much available. And I don't know that you could do that, but I don't know, it's just hidden. I can't figure it out. I look at their budgets all the time and I can't figure one thing from the other, to tell you the truth. But you're telling me the audit should say that.
They should. Audits are, they're kind of the same format for everybody, so we should be able to drill down into that.
And we see their major accounts, their pumping fee account, their replenishment fee account, and their mitigation account, because there should be 3 accounts. And then there's the other, I don't know if there's another account for all the grants and all that, but we should at least see an account for mitigation, how much is in there, and an account for replenishment and pumping fee. I'm not sure, that the pumping fees,
I mean, those are restricted funds.
Yeah.
They should be listed out individually, yes.
all right. Whenever it comes in sometime and you want to look at it, I'll be glad to sit with you and try to look through and figure it out, because I got people asking. Yeah, that's a lot of money. And so we're $14 million of replenishment fee. That gives us another roughly $10 million to pay before supposedly it's supposed to stop. Right.
That's the theory.
Yeah, that's a theory, because the pumping fee never stopped. It was supposed to stop when they got their 1.5 million caught up, and it still hasn't ended. And since they have to pay back the replenishment fee, that may go on and on. Okay. Stan, you have anything on the year-to-date for this fiscal year?
Yes and no. I guess sort of in I'm real happy that last year turned out to be a whole lot better than what we were seeing back in July when we first did our estimate. But to be quite honest, it still does bother me a bit that our initial understanding of what our year-end balance for water sales ended up being $1.2 million low. And if we do, and I don't mind waiting 6 months to do a review of our budget. But if 6 months from now, what we're basing our budget review and update on is in the order of $1 million low in terms of water sales, then it seems to me that we should be looking for a better way of trying to estimate our water sales. It just bothers me that the numbers lag that much because we flat don't really know how much water sales we have.
But you know, it's,
Until months after the end of the
it's just
fiscal
an,
year.
you know, to sit down and look at water sales and say, Ty, I want you to predict by month what those water sales are going to be within 5%. That's an impossible task. You got no clue how many people are coming, how many people are going. You don't know how many people are going to, stop watering their lawn. I mean, there's so many variables in it. So in my opinion, what you do is you take historically, you look at it and you take your best estimate about what's been going on the previous years. I don't know any other way. I couldn't tell you any other way to do it.
Yeah, the end of the year, there's just no way around it. The end of
Yeah.
the year, I have to wait for a full month so we get all the revenues in. And
Right.
then I have to do the calculations of how much of that revenue is accrued back to the previous
Right.
year. There's no way around it. That,
And we don't forget, we don't base our expenses entirely on what our income's going to be. Every department is asked to submit their expenses to the best of their ability. And George and Ty will look at all those and say, man, we got to cut here. Why are you spending this? So they don't, so I would hope that John and Renee, all their departments say, hey, look, we have this much money to spend. Let's try to spend it all. I would hope that's not the way that you do it.
It's not.
Yeah, I didn't think
yeah.
it was. Yeah.
I just
May
want to see, go ahead, Stan.
May I ask, are we using earned income or are we using cash income for these numbers?
revenue is earned income.
Earned income.
Yep.
So when we send out billing in June, or no, let's use July. Okay, when we send out bills in July, we're assuming that all of those bills will be paid.
Not all of them. We have an uncollectibles account as well on the expenditure
Oh,
side that
yeah.
offsets
We were
what we
talking-
anticipate. But yes,
Like 95, at minimum 95% and probably closer to 97 or 8, right?
right.
Okay, so if we're using the billings that go out, we should know, I mean, the following month, we should know how many bills went out and what they were for. I guess I don't understand,
So, okay, for example, a bill that is sent out on July 15th,
you know,
that's the next month, half of that revenue is going back to the previous year. Half of that
Previous
revenue
month.
stays.
Yeah.
Or to the previous month.
Right.
And half stays. That's why I have to wait till all the billing's completed. Billing's not completed on the last route until the last week of the month.
Right.
Even though that's a smaller portion that goes back, I need to wait for that to be done so I can calculate what that accrual is.
I guess it just seems to be, there's always going to be some delay. Why can't we just assume that when we send bills out in July, that's what we've earned for July?
Stan, I think
That's
that's
not-
because we don't have the capacity to read all the meters and base all the billing. We have a limited staff. You would have to have this huge staff if you wanted to do, let's just start on, the first day of this month to the last day of this month. One, and it gives you these sort of unequal
Oh,
billing periods. And then what happens is our staff is always busy sort of rolling out the
No,
bills. So we're
I
trying to
understand
spread.
that aspect. I wasn't concerned with that. What I'm saying is, if we send out bills at any time in the month, that is, when we've basically earned that money. and that should be for that month.
That's not true.
This is a question that you could bring up to the General Accounting Board of the US and Canada if you would like. This is how they say to account for it. I have no discretion in that.
Wow.
Yeah, so, like my bill, I think mine goes from the 18th to the 18th roughly. So when I get my bill, part of what I'm paying is for so many days in the previous month or so many days. Yeah.
Yeah.
The only way to correct that would be to go on a strictly monthly billing cycle.
Right, we bill everyone on the first of the month.
Billing on the
Yeah.
first of the month, and I don't know whether.
That's 12,000 and we don't have the capacity.
We
to
don't have
do
the
that.
capacity to do that, yeah.
Yeah, you gotta print them, you gotta mail them, like,
Could we push our billings out as far as we can toward the end of the month?
But he just said that the more you,
Yeah,
Stan, we just don't have the workforce to do it. We would have to hire a bunch of extra people that would sit around for most of the month and then be
We
really
don't actually
busy.
we don't actually read meters anymore,
No.
do we?
No, but there's a lot that goes into when we have to do notice of terminations, we have to do 48s, we have to do lockoffs. All that comes with billing, as well as printing the bills, mailing the bills, verifying, because sometimes you have to go through, sometimes weird things pop up and you've got to make sure that
Okay.
the billing, you got to do
Okay, I get it.
rereads, you got to do.
It's just, it's a matter of staffing, I mean, because we'd have to have a,
Well, even, it sounds like even staff wouldn't help that much.
Yeah, we looked at that because we thought that might be a good idea for this, but there's no way we can do it. We looked and.
Okay, it just,
Yeah.
I am concerned that it takes us, I mean, if we have a chance to spend some money to do something, and then we can't do it because our data shows us we're not gonna have the money, but turns out at the end of the year, we had $1 million more than we thought. I mean, it just that bothers me, okay, but I'll,
Get it.
but I understand what you're saying, I guess. I guess I don't have to like it.
Yeah,
It is, I personally think that tying your departments do a good job of estimating these things.
Yeah.
Like it says, this sheet here is a guideline. It isn't the set in stone, but it's our guideline of where we want to go. It keeps track of the departments, it keeps tracks of all these things. If something jumps way out of line, we can attack it. But I think, the fact that, like you say, probably last year, we're going to have somewhere, instead of 500,000, maybe between 1 and 200,000 somewhere, once the budget and audit is done. And and in the previous year, I just think that you do the best you can. I've done a lot of deal with estimating budgets. It's not an easy thing to do, even from the departments to estimate their costs and expenditures.
No, but they do pretty well and they
Yeah.
almost always come in under.
And of course, if they get out of line, you just slap them up ahead and.
Yeah,
Yeah.
there's a couple.
Yeah.
Most
Get us in
recently,
the office.
most recently, he's been getting on me because I want to have my
Yeah.
budget for conferences, like, and helping people with college and all the other good things we do for our employees, so.
All right,
Now I owe Ty extra budget inputs.
let's move on if you don't mind.
Sure.
Anything? No one online? Are there,
Oh, Ron, let's get them.
I'm trying to keep, and these graphs, they're wonderful. I don't know if you want to keep doing them. It's entirely up to you.
I'd rather not.
I don't need them for any reason. I mean,
Maybe the only one that looked, is cumulative compared to cumulative in previous years, just to kind of get a
Yeah.
point.
yeah,
But
comparison of 2021 to 2026, that one there. That's always, I can agree with that one
I like
because we
that
can
one.
see what our trend is.
Yeah,
Yeah.
but the rest of them are, yeah. It's,
So now you made me look at, now that we have two 2025s.
I not update that one.
2, 3, 4. Yeah, I'm not sure.
Account payables now?
Yeah, we're going to go accounts
Sorry,
payable.
Ty.
We're on accounts payable now. This looks like a couple big weeks.
Remember, we're gonna go by page.
We're going to go by page. And of course, the very first page, I never consider anything because all that's employer contribution, taxes, PERS and things like that. I mean, you're not going to change any of that, what they call prepaid accounts. That's ones I have a question on.
On page 2?
Yeah. So Ferguson at 96, that's the last payment for the pipe?
Yeah, well, it's other materials.
Oh.
We've paid for all the pipe we got out back, but it's.
Other
other
materials, okay.
materials we
That's
needed.
where we buy a bulk of our materials is Ferguson?
Yeah.
Yeah, okay. Who's Hatch? Is that it?
Hawk.
Hawk. What is it?
They do like laboratory testing supplies.
Oh, okay, all right. The Groundwater Authority, bless their heart.
Yeah,
I don't see anything on that one.
oh.
Accounts payable for,
On the very last entry, Parker.
Yes.
The groundwater, is this the total amount that he gets paid? Or is this the power? Because he actually works for another firm that he's a subcontractor
So
for.
this is for Tim himself, not through not through Ramble.
Okay. So it's,
And it's usually, he bills like 3 or 4 months at a time, so.
I don't see
okay,
anything.
the next
All right,
page.
I'm
is
going to the next
total.
one. I'm going to skip over the prepaid accounts. I see Filtronics on there but that's about it. All right, I think there was someone here I had questions about. Let's see. CalPERS. There's that Groundwater Authority. 58. Here's our lawyer bills that we didn't see the previous one. Upterra, that's the repair of the,
It's not the repair, that's their monitoring contract.
it's yearly contract, isn't it?
Annual
It's annual
contract.
contract, okay.
Actually, NG is who they're called now.
Okay. Edison.
Okay, that was prepaid accounts you're looking at.
No,
prepaid?
next
No.
page.
It's the next page. I don't see anything on prepaid accounts that catch my eye.
No, I don't
Uh,
either.
Yeah.
I will explain that if they ask, but I know what that is. It's-
GHD?
Yeah, he was just asking you about that. Yeah, that is Dune 3. They are the consulting engineer that's doing all the work for the Dune 3 project.
Oh, that's, should
And
be good.
We have gotten money first from the state to pay GHD.
Okay.
That come out of grant funding.
We actually got that
Funds the
before.
funds first and then we pay them.
Okay.
Yeah, we told them we won't pay till we get it from the.
Oh,
state.
that's right, yeah. And they do owe us some more now. That's what you're trying to collect. Is that correct, I think? Don't they? Yeah, good luck.
So they actually do all the
Right.
submitting of those invoices to the state and everything, so.
On Southern California Edison,
Hmm.
55,000 basically, is that because our solar fields are down?
Yeah, that would be lower if we had our solar fields up.
And just as a side issue there, are we making any progress on insurance to pay to
So,
get?
I just got the letter today from the third-party claims adjuster saying he has submitted everything now to Sederma. So now we're just wait on Sederma.
Okay,
Okay. How much he submit, did he say?
It didn't include
Oh.
a copy.
Didn't put a copy?
Yeah,
Oh.
Just a letter saying, hey, I sent it, but I'm not telling you what's in it.
and we have estimates for what the total is going to be?
Yeah, 108,000 for repairs. Is,
Could be worse.
could be. So we'll see what Sederma says.
Okay,
I don't see anything else on here.
I'm fine.
All righty. Do we want to recommend approval of the accounts payable?
Yeah, I recommend that we
All right.
have the board approve the account.
We will do that then. I have one question here. It says, see, Stan and I both have workshops this September 17th and 18th for the virtual workshop for board's role in finance. George, are we going to set up to do that here in the conference room?
Yes.
These dates here and here.
Yep.
9 a.m. till noon, Stan, so be ready.
Yeah.
Are you going to be awake by then?
Yeah. Not 100 And George, you're going to join us, right?
Of course.
Okay.
Yeah, that's a good man, good
All
man.
right. And I will inform both committees, well, actually, I will not, next month, I won't be at any committee meetings or the board meetings. You're going to miss me. I'm going to be back in Indiana, back home in Indiana for a while. Yeah, we're driving, we're taking a cross-country trip. So anyway, anything,
Up there now these days?
I'm going to go ahead and close the meeting, if you don't mind.
Um,
Close the meeting at 3:44,
um,
unless you have something else you want to add.
Just one.
Oh, sorry.
Thing. I noticed in the draft agenda, there's a discussion by the, I think, the admin committee about temporary positions to work on the Brady pipeline project. And there's no mention of the cost. So I was hoping at the actual board meeting, when that comes up,
Yeah.
that someone would
I
have,
think John will probably have something.
Yes, we will. He'll be presented to you at the board meeting.
okay.
Okay.
There'll be a cost. Okay, that's fine. That's all.
Anything else?
Now you can close the meeting.
All right, I'll adjourn the meeting at 3:45. Thank you. So we decided to drive.